Hello everybody, welcome back to Clear Surf Financial Education. Carl Keister here. And so today I thought I'd start off my video with a public service message. Please wear your sunblock. I've got 4 or 5 spots you can see here that have been removed. Probably about 7 more in the last year elsewhere. That this was just a freezing these. Others removed from not wearing enough sunblock when I was younger and spent too much time in the sun. So be careful out there. Okay, so getting back to what's going on. Tomorrow Joe Biden gets sworn in as the President of the United States, and we're going to live in some interesting times as there's over 20,000 National Guard troops protecting him. This is the same party that basically wants to defund the police and reduce the military's budget, but now they want protection from their own people. Ironic. So where do we go? He wants to, day one, he's already talking about breaking the lease on the Keystone pipeline, which we've gotten to the point now we're energy self-sufficient. We're actually exporting oil. We're not relying on other countries to provide energy to this country. So he wants to undo that. That's going to affect energy stocks. Have been the #1 group so far this year, and we're 3 weeks into the year. I don't know how that's going to hold up, so I would be careful if you jumped on that early on in the year. I mentioned this a week or so ago in a video that energy and finance have done well, and now all of a sudden energy is going to be hitting some headwinds here, I believe, with all this regulation they're about to start feeling, which is going to increase their costs, which is never good for business. Number two, you've seen that the financials all of a sudden were rocketing higher, and now they've cooled off as Wells Fargo missed their numbers. And I don't even know how that bank is still in business. I wouldn't put money there if there's no bank left. So, just my personal opinion, they've had too many chances and made too many mistakes in the last several years for me to trust them anytime soon. But let's talk about some other stocks. I've been talking about electric vehicles. I've been talking about Tesla. I mentioned NIO in other videos. I even mentioned GM a little over a week ago. And they're starting to get some love right now. And that is largely because we're one of the largest energy vehicle, or one of the largest production vehicles out there. And all of a sudden Tesla been in business for 10 years, and Tesla's market cap has gone up exponentially. I just checked today. GM, like I said, I mentioned it last week, that it's basically got some information out there that they're going to start pushing more, and they actually did a deal today with Microsoft. They announced this deal where Microsoft's cloud, Azure, is going to help them with their autonomous vehicle production. So they're going to be doing the engineering behind it, the it's easy for me to say, autonomous vehicle production. And as you've heard me mention in other videos before, that I believe this shift is coming. The tipping point between electric vehicles and gas vehicles is getting close. And then the next thing right after that is going to be autonomous vehicles, where we're just going to pull out a phone and we're going to, like an Uber or Lyft app, you're just going to call up a vehicle to drop you off on the office if you want to go there when you go out to dinner. And from what I'm reading, some of these people are projecting. One of the gentlemen I watch and get a newsletter from, very smart man, thinks in the next 3 to 5 years that this is going to save the average person about $3,000 to $4,000 a year. They don't need a car, especially when one sits around, like mine right now, sits around 98% of the time, me working from home. So I would love to save $4,000 and not have to worry about maintaining a vehicle and the depreciation every day as I'm paying for it as it's depreciating. So anyway, GM market cap is 10% of Tesla. So if you believe this trend is there, and I mentioned GM stock a week ago at 47, today it's up another $8 or such. Let's just take a look here quick. We'll do this live. So it's up $4.62, up 9% at 54.5. So if you think Tesla is worth 10 times more than GM, then maybe you don't want to buy Tesla. I mean, you don't want to buy GM. Maybe Tesla needs to sell off and come back down a little bit. Now, I know GM doesn't make solar panels for roofs. They're not making solar panels to replace generator apparatus, but that's a big, big move. Now, one thing else I want to talk about. I thought this was rather interesting. Kramer mentioned this, and I did some research on my own this weekend. There is a Reddit, you've heard of Reddit website. Well, on Reddit, there's a group called wallstreetbets. And I was astonished. Like, at first I heard Kramer mention this, just talking about how Gamestop and some other stocks are getting pushed up and they're shorting these people, or they're crushing the shorts, put it that way. So with that being said, He's running the money. I watched this weekend all the chatter of all the people buying GameStop, and they're talking about they're making these animated videos about Cramer's talking about they're crushing Cramer, they're crushing Co, and they're talking about all these people basically that who are short in the stock, and they are crushing it because the short interest right now is 140%. When I saw that, I didn't think that was possible. That means 40% more shares are shorted than even exist. I don't even know how that's possible. You can short more than 100% of a stock. I didn't think you could, but 140% are short. So you've got all these short sellers who are basically scrambling every day as this guy is out, and all these people, 1.9 billion, they call them degenerates on here, 1.9 million people are throwing their lunch money and whatever free money they have sitting around, or stimulus money, I don't know what it is, but they're on there and they're bidding this thing up every day. To prove the point, I thought I'd watch it. And after I did the research this weekend, stock was at 34 of the weekend. It went from 34 on the open in the first half hour to 45. So we're talking a 30% move in the first hour because you have so many people kept bidding this thing up, and the shorts are scrambling to cover because they're losing their ass at this point in time. Like, I was dumbfounded. The other thing they're pushing on here is BlackBerry. When's the last time you heard of BlackBerry? This was a $7.50 stock that's now trading at 11. That's another one they're pushing on there. So I wouldn't be surprised if this thing is going to start. I wouldn't be surprised if it's selling at 15 or 20 bucks. Again, just my opinion, because you've got 1.9 million people following this webpage, and they're just jumping in, following each other blindly. And I'm reading some of the comments here. These are a lot of people in here that do not have any understanding about stocks. There are some people posting in there that have some legitimate reasons why that stock could be higher. But for the most part, they're just squeezing shorts and just praying that it keeps on feeding into it. So I'm sure some of the people that bought it today above 40 are not very happy because, let's just take a look. I mean, it went from 34 to 45. Right now, it's only up $3 at 38. So anybody that got excited and kept bidding it up there, they're learning a quick lesson now. But that doesn't mean next week or this rest of this week it won't go higher. The chatter on this blog is unbelievable. I'm sorry, not a blog, but on Reddit, it's just phenomenal. So anyway, I wanted to bring that to you. I think that we're going to see some real change here coming up shortly. You know, with Joe Biden, looks like he's going to move forward with this more liberal agenda than I was hoping for. When you're talking about entering the Paris Climate Accord on day one and stopping the Keystone Pipeline, which allows us to be energy efficient. We're not depending on another country for energy. I mean, that's a national security issue. That's a good thing to me. And so I would be careful if you're in the energies. I would be careful if you're in the financials. They did not look good yesterday at all. But as I mentioned in my last video, and I'll leave links to my last video, I don't know when it's going to come, but we're definitely due for a correction. And that correction may be 10, 20, 30%. But as I've always mentioned before to my long-term investors and those people who are in this for the long haul, not a reason to panic because Janet Yellen's getting confirmation here. And right now, I listened to a little bit of that earlier, and she's pretty much saying that with these low interest rates, they're going to be very accommodative. So that tells me that these stocks that are low and people are pushing them up because they're shorted or getting squeezed, you're allowing almost anybody and everybody can jump on Robinhood, who can jump into a trading account and buy partial shares. But right now they're targeting very inexpensive shares. But if they wanted to push Amazon or something else, you can go in and buy partial shares of Amazon. It's trading over $3,000 a share. You can go in there and buy partial shares. You only need $100, $1,500 to get invested. But right now they're pushing BlackBerry. So who knows? We'll see how that plays out. But I am a little concerned because some of the other people that Biden has picked so far were Obama area people, and they are talking about regulation on the markets. And so we'll see how that plays out. And the other thing I wanted to bring, I think I'm going to save this for the next video. I'm going to do some more research on SPACs. And I'm going to bring a video on Thursday, much more detail about SPACs. And I've been looking into this because I'm just seeing so much more talk on this. And basically what a SPAC is special purpose acquisition companies. Because there's so much free money out there, and Janet Yellen's already committed to keeping money cheap, interest rates low, these hedge fund managers and billionaires, they're raising money, and what they're doing basically is raising capital and buying out companies. So they can take a public company, and instead of taking them private, they can do what they call a merger. They're just buying into. I saw a deal today. Someone's looking at Peloton. I saw someone looking into BarkBox, which I don't believe is a public company. So they're doing non-public companies and also public companies, but they're calling them mergers. And some of these SPACs are going from $10 to $20, $25. You're talking 100% return or more in a month. Some of these just started trading in January. So I'm going to do a video on my next video on Thursday on SPACs. I'm going to go into much more detail, but just to give you a little teaser, I mean, some of these are big. I mean, Pershing is the largest right now at $5.9 billion. That's the market cap. And he's been around for a long time. He's very well off. And another one on the chatter I see on some of these websites that are pushing these is Churchill Capital Corp, CCIV. That is one also that went from $10 to $20 in less than a month. I mean, double your money in a month. That's raised $3.8 billion. So now you're getting some of these people that aren't just buying individual stocks. Because it's a low cost, you can buy some of these SPACs for 10, 20 bucks a share. That's very appealing for someone who doesn't have a lot of money to invest, especially when you see they're doubling in a year. I'm sorry, doubling in a month. I take that back. Doubling in a month. And then if you really got to buy into the management. So again, I'm going to save that for the next video. But anyway, we're going to see how tomorrow goes. I hope there's not any more civil unrest tomorrow. And hopefully we can start getting on a page where let's focus on what's good for the country. Now that we pretty much ripped the country in half, we've got 50% of the country can't stand the other 50%. Hopefully we can start working on what's best for the country, the future of the country, not what's just best for your next election. So at that point, we'll leave it there. Carl Keister, Clear Serve Financial Education. Take care.